It begins abruptly. One morning, factories stop production, offices close, and streets grow silent. The US, the world's largest economy, is at a standstill. The government has ordered a full shutdown for a year, whether due to a catastrophic national emergency, political paralysis, or unprecedented social upheaval. Citizens, corporations, and financial institutions face the reality. Nothing moves, nothing operates, and the lifeblood of the economy halts. Immediately, panic sets in. The stock market, previously a hub of activity and wealth creation, freezes in uncertainty. Trading halts or collapses as investors scramble to assess the implications of a full-year shutdown. Indexes plummet as confidence evaporates. Trillions of dollars in market capitalization vanish within days. Retirement accounts, mutual funds, and institutional investments tied to U.S. equities are decimated. Fear spreads from Wall Street to Main Street, permeating households and businesses alike. Industries grind to a halt. Manufacturing plants, from automotive to electronics, close their doors. Supply chains that span continents stall. Raw materials cannot move, goods cannot be shipped, and production lines freeze indefinitely. Companies reliant on US-based manufacturing face delays, lost revenue, and contractual penalties. Corporate bankruptcies multiply as cash flow evaporates. Even companies with substantial reserves struggle to survive a full year without operations. The labor market collapses. Millions of workers are furloughed or laid off immediately. With no income, consumer spending plummets. Service industries, hospitality, transportation, and retail sectors are disproportionately affected. Businesses with perishable inventory suffer immediate losses while essential services struggle to maintain operations. Unemployment claims skyrocket, overwhelming government agencies tasked with support. The social consequences are profound. Families lose homes, access to healthcare diminishes, and public unrest begins to grow. Financial institutions experience unprecedented strain. Banks face massive defaults on loans, mortgages, and lines of credit as businesses and individuals lose income. Liquidity crises emerge as deposits are drawn down for essential survival. Federal Reserve intervention becomes necessary to prevent systemic collapse, yet even aggressive monetary policy cannot fully offset the halt of economic activity. Credit freezes tighten, and the risk of a total financial system failure becomes real. The consumer sector, which drives 2/3 of US GDP, ceases to function. Retailers close, e-commerce slows, and consumer spending, already frozen by unemployment, disappears entirely. Essential goods such as food, fuel, and medicine face distribution bottlenecks. Panic buying leads to shortages, further exacerbating social instability. Businesses reliant on discretionary spending are forced into permanent closure, leading to long-term unemployment and erosion of corporate infrastructure. The housing market is severely impacted. Mortgage payments are missed en masse, foreclosures increase, and property values decline. Real estate transactions halt as buyers cannot secure financing and sellers face uncertainty. Construction projects stop entirely, leaving unfinished developments scattered across the country. Regional economies dependent on construction, development, and real estate experience immediate collapse. The financial damage is measured in trillions, and recovery is projected to take decades. The stock market reacts violently. U.S. equities, bonds, and derivatives tied to operational companies see historic declines. Investors attempt to sell, but face illiquidity due to operational shutdowns. Panic spreads globally as hedge funds, mutual funds, and international investors reevaluate exposure to U.S. markets. Volatility indexes reach unprecedented levels, reflecting systemic uncertainty. Confidence in American economic resilience is shattered. Global supply chains are disrupted beyond repair. The U.S., a central hub for manufacturing, logistics, and technology, no longer fulfills contracts or exports goods. International companies dependent on U.S. production face delays, shortages, and financial losses. Port closures halt shipping, creating congestion and backlogs worldwide. Key industries including aerospace, semiconductors, pharmaceuticals, and automotive face unprecedented disruptions. Government revenues collapse. With businesses closed and wages non-existent, tax collections drop precipitously. Federal, state, and local governments struggle to maintain essential services, from healthcare and law enforcement to infrastructure maintenance. Emergency borrowing escalates, further straining an already overextended fiscal system. Social programs are stretched to the breaking point as millions rely on unemployment benefits, food assistance, and emergency support. Healthcare systems face dual crises. Hospitals and clinics may operate at limited capacity due to staffing shortages, supply chain disruptions, and financial strain. Pharmaceutical companies cannot distribute essential medicines efficiently. Elective procedures are postponed indefinitely while emergency care becomes chaotic. Public health emergencies, accidents, and chronic care management are severely compromised. Energy and utilities sectors experience operational challenges. Power plants, refineries, and grid management systems are strained by reduced workforce and halted maintenance schedules. Fuel distribution becomes irregular, affecting transportation, manufacturing, and residential consumption. Energy prices fluctuate wildly, influenced by scarcity, panic, and speculation. Utility companies may face bankruptcy if unable to maintain operations or collect payments from struggling households and businesses. The labor market crisis deepens. With unemployment surging into tens of millions, the economic and social fallout escalates. Workers face long-term job insecurity, skill depreciation, and mental health crises. Unemployment assistance, food programs, and social services are overwhelmed. Workforce retraining is impossible under total shutdown conditions, leading to long-term structural unemployment. International markets react to U.S. inactivity. Foreign investors reliant on American trade, supply chains, and markets face severe losses. Global commodities, currency exchange rates, and financial instruments are affected by U.S. shutdown-induced uncertainty. Countries heavily dependent on U.S. imports experience shortages, inflation, and economic slowdown. International stock markets experience cascading declines as confidence in global economic stability erodes. Corporate bankruptcies proliferate. Companies across sectors cannot sustain operations for a full year without revenue. Small and medium-sized enterprises collapse first, followed by larger firms with more complex operations. Investment funds lose entire portfolios, exacerbating financial instability. Long-term economic infrastructure, innovation pipelines, and industrial capacity are decimated. Recovery becomes uncertain and highly dependent on government intervention and external financing. Technology sectors face stagnation. Silicon Valley, traditionally a hub of innovation, ceases production, research, and product deployment. Startups fail due to lack of funding and operational capabilities. Large tech companies pause R&D and delay product launches. Global technology adoption slows as U.S.-developed software, hardware, and internet services are disrupted. The international competitive landscape shifts as other countries fill gaps in innovation and production. Consumer behavior and psychology are profoundly affected. With a complete shutdown, households focus on survival rather than spending, investing, or planning for the future. Social unrest emerges as scarcity, unemployment, and fear spread. Mental health crises increase, social cohesion weakens, and trust in institutions is eroded. The cumulative impact of fear, stress, and deprivation shapes societal behavior long after the shutdown ends. Transportation and logistics collapse. Airlines, rail systems, trucking networks, and shipping companies halt operations. International and domestic travel ceases, disrupting global trade, tourism, and supply chains. Ports back up, perishable goods spoil, and global commerce is interrupted. Alternative routes, secondary logistics hubs, and emergency plans are overwhelmed. Recovery of transportation networks requires massive investment and coordination. The banking sector faces catastrophic defaults. Loans for mortgages, businesses, and personal consumption go unpaid. Banks must draw on reserves, seek emergency funding, or collapse entirely. Depositor panic triggers runs on banks, threatening systemic financial collapse. Credit availability is reduced, further limiting economic recovery. Government intervention, including guarantees and bailouts, becomes essential to prevent a total banking crisis. Stock market crashes reach historic levels. Indexes such as the S&P 500, NASDAQ, and Dow Jones lose unprecedented value. Corporate earnings are non-existent, future projections meaningless, and investor confidence shattered. International markets with exposure to U.S. equities experience correlated losses. Pension funds, retirement accounts, and institutional investments suffer devastating reductions in value. Manufacturing industries collapse. Factories cease production, maintenance schedules are interrupted, and industrial machinery degrades without oversight. Supply chain interdependencies amplify losses. Imported and exported goods face delays, scarcity, and increased costs. Critical sectors, including aerospace, automotive, medical devices, and electronics, are paralyzed. Recovery requires massive reinvestment in infrastructure, workforce training, and capital replacement. Agriculture and food systems experience shortages. Farms reliant on labor, machinery, and distribution channels face collapse. Crop harvesting is disrupted, livestock management suffers, and food processing plants halt operations. Grocery stores face empty shelves, inflation spikes, and rationing becomes necessary. Food insecurity escalates nationwide, and international import-export agreements are disrupted. Energy infrastructure is strained. Power plants, oil refineries, and renewable energy facilities operate at reduced capacity. Grid management is challenged by reduced staffing and maintenance. Energy scarcity affects households, businesses, and industrial production. Price volatility and shortages exacerbate economic and social stress. Education systems collapse. Schools and universities close indefinitely. Online education is hindered by infrastructure limitations and socioeconomic disparities. Future workforce skills are affected as generations experience gaps in education, professional development, and social learning. Long-term economic consequences include reduced productivity and innovation capacity. Healthcare access deteriorates further. Hospitals are understaffed, supply chains are interrupted, and essential services are limited. Public health crises, chronic care management, and emergency response capacity are severely diminished. Mortality rates rise due to preventable conditions, delayed treatments, and systemic collapse of healthcare infrastructure. The shutdown creates long-term unemployment. Workers face skill degradation, extended income loss, and psychological stress. Recovery efforts require retraining programs, government support, and private sector initiatives. Many industries permanently downsize, altering economic structure for decades. Global economies face ripple effects. Countries dependent on U.S. imports, exports, and financial markets experience recessions. Trade flows are disrupted, commodity prices fluctuate, and international investments decline. Global GDP contracts as U.S. inactivity reverberates worldwide. Geopolitical tensions increase as countries compete for stability, resources, and economic advantage. Financial and corporate recovery is slow and complex. Once the shutdown ends, companies face rebuilding infrastructure, rehiring workers, reestablishing supply chains, and regaining consumer confidence. Government stimulus and policy interventions are critical to restarting the economy. Stock markets gradually recover, but investor psychology is forever altered, with increased caution and reduced risk appetite. Innovation and technology face long-term setbacks. Research projects, product development, and technological breakthroughs are delayed or abandoned. Competitor nations gain strategic advantage as the U.S. loses innovation leadership. Startups and entrepreneurial activity decline due to lack of funding, operational support, and market confidence. Consumer culture changes permanently. Spending habits are altered by prolonged economic inactivity. Households prioritize savings, risk reduction, and self-sufficiency over discretionary spending. Luxury markets contract, and durable goods markets are constrained. The American standard of living adjusts to the long-term consequences of economic disruption. Societal and political consequences intensify. Public trust in institutions erodes, social unrest increases, and political polarization deepens. Policy debates focus on survival, economic stabilization, and prevention of future crises. Governance, civic engagement, and international diplomacy are reshaped by the experience of a year-long shutdown. Global markets experience structural shifts. Nations previously dependent on U.S. markets adjust trade, finance, and manufacturing to bypass American influence. New economic hubs emerge, capturing market share, technological advantage, and political influence. The U.S. must rebuild its role in global economics and governance. Over time, recovery begins. Government interventions, corporate restructuring, workforce retraining, and international trade normalization drive slow rebuilding. However, the scale of destruction ensures that pre-shutdown economic patterns, consumer behavior, and corporate structures do not fully return. The experience leaves a permanent mark on national strategy, fiscal policy, and societal expectations. Ultimately, a full-year U.S. shutdown is a scenario of unprecedented economic, social, and geopolitical disruption. Stock markets, corporate America, labor forces, supply chains, and international relations are profoundly affected. Recovery requires strategic planning, investment, and societal adaptation. The scenario serves as a stark reminder of the fragility of interdependent systems and the enormous value of continuous economic activity. The story of a one-year U.S. shutdown is a narrative of collapse, resilience, and adaptation. It demonstrates how systemic inactivity cascades through industries, markets, and societies, influencing global stability. The scenario underscores the importance of preparedness, crisis management, and strategic foresight in a world where the U.S. economy plays a central role.